Welcome to the Corporate Director Podcast, where we discuss the experiences and ideas behind what's working in corporate board governance in our digital tech-fueled world. Here, you'll discover new insights from corporate leaders and governance researchers with compelling stories about corporate governance, strategy, board culture, risk management, digital transformation, and more.
Hi, everybody, and welcome back to the Corporate Director Podcast, the voice of modern governance. My name is Dottie Schindlinger, Executive Director of the Diligent Institute, and I'm joined once again by my co-host, Megan Day, Strategy Leader here at Diligent. Megan, how are you doing today?
Dottie, happy St. Patrick's Day and happy return to work, Miss Schindlinger.
Yes, indeed. So I'm back. Today's my first day back after 3 weeks of convalescence. Boy, that's a hard word to say. After getting knee surgery. So it is interesting, Megan. I was thinking about this before we started recording the show. I'm like, am I going to have anything pithy to say? So all I've been focused on for the last 3 weeks is getting off the cane and being able to get my knee to go all the way around the recumbent bike.
You mean, Dottie, you haven't spent the last month reading 2025 proxy season previews?
Oh, I wish I could say that I have, but no, Megan. I'm ashamed to say I spent the last 3 weeks when I wasn't doing physical therapy, binge watching terrible television, many shows that I do not recommend, and some that I would. For example, I don't know if you saw 0 Day on Netflix, but I thought that was quite good.
Is that the Robert De Niro one?
Yeah, Robert De Niro. And then the other one that I watched was Paradise with
that was great.
Sterling K. Brown. I thought was really fantastic. So those are 2 good series. Otherwise, I don't know what to tell you.
Well, I was going to say, good for you. I have been reading all about proxy season. So we're just going to dive back right into the governance geekdom.
Let's do it. I know this is a great interview, Megan. I'm excited to share with our audience that you had with Doug Schnell and Sebastian Alsheimer. Do you want to talk a little bit about the conversation that you had?
Yeah, we've had these gentlemen on the show before, good friends of the pod over at Wilson Sonsini. They both have expertise in shareholder engagement, shareholder activism, M&A, all interesting topics, obviously, to our audience and always very relevant coming into a new proxy season. You know, we've seen a lot of interesting trends over the last couple of years in terms of a general rise in activism, but a lot of activity sort of taking place behind the scenes ahead of, the big votes. And will those things continue to stay the course in this weird, it's the only word I can use for it, weird 2025 that we've seen so far?
Well, great. Let's give the interview a listen and come back and reflect a little bit on what we heard.
Joining us on the Corporate Director Podcast today are Doug Schnell and Sebastian Alsheimer, both partners at Wilson Sonsini. Thanks for joining us.
Thanks for having us, Megan.
Well, Doug, Sebastian, you have both joined us on the show before, but I'd love to start off with maybe you sharing a bit about each of your roles at Wilson Sonsini. Doug, let's start with you.
Sure. Yeah, happy to. I am kind of split between our activism and M&A practices, so spend a lot of time helping companies think about activism, get prepared for it, deal with it when it shows up, and then spend about another 50% of my time or so inside of our M&A practice, primarily focused on public company strategic transactions.
So I co-lead the group, the shareholder engagement or activism practice with Doug. I'm based in the New York office, and unlike Doug, I focus only on activism. And I actually came from another firm that represented activists only. So Doug and I have sort of complementary skill sets and experiences in several ways.
Well, great. It is great to have you both on the show. These are topics that are certainly near and dear to our director audience's hearts, good, bad, and otherwise. So let's dive in. We recently published our What Directors Think report in partnership with corporate board member and FTI Consulting. And this report is an annual survey of U.S. public company directors about the year ahead. And this year in the survey, only 11% listed shareholder engagement as a top priority. But more than half indicated that they have increased their interactions with shareholders relative to 2022. And that's definitely a theme I think we've seen over the last 5-10 years even. I'd love for you to reflect a bit on these findings and maybe share what you've seen in your own work with clients.
Yeah, I mean, I think convincing companies that they could be an activist target, that's, not necessarily what they want to hear. And that can be challenging. But, we continuously sort of assess the vulnerability for our public company clients. And if we see something, we try to get in their grill, right? But with respect to the difference you mentioned between engagement as a priority and increased interactions, I mean, I hope that that's, reflecting that people like Doug and I and our colleagues at peer firms are at least somewhat successful convincing our clients that it pays off to be proactive about shareholder engagement and activism sort of before it hits you.
Sure.
Megan, it's a great question. I find the results a little surprising, right? Which I think is probably the source of the question. You would think that directors would be more focused on shareholder engagement, and perhaps it's just people thinking about the question in different ways as they answer it. But I would really encourage all directors to make sure that the public companies that they're at are thinking long and hard on shareholder engagement and making sure they have good shareholder engagement practices. I really think that's table stakes for boards and public companies today. It's not something you can ignore, and it just kind of leads to heartache if you do.
Yeah. Yeah. And I think this is a great example of the many things stacked on board members' plates. And it is hard to sort of rank stack them when there is a lot going on and a lot of things really should be front and center all of the time. Shareholder engagement, certainly example of that. And well, we're headed into a new proxy season. So I would love to talk a little bit about shareholder activism here. So, what were some of the big trends last year, and how do you see things evolving this year?
Great question. I'll start off and then turn to Seb. But I think, you saw activism rebound some. It's kind of back to historical levels of consistent with historical practice, right? I think you'll probably see some of that this year. Unfortunately, an unstable environment is both good and bad for activism, right? It creates entry opportunities at companies that may have become undervalued. It also can make activists, like anybody, nervous to push forward with campaigns. But I think last year, you sort of saw a return to kind of consistent activism, a little bit more M&A focused activism, which you had not seen in a rising rate environment. To the extent interest rates go down, that's only going to lead to more calls for M&A. So we're looking at that. But I think, last year was kind of back to normal activism coming out of the pandemic. But Seb, what do you think?
No, I agree with that. And there are lots of trends. I would highlight one because Wilson has been involved in a few situations where this is sort of an issue, and that is sort of activist crowding, situations that involve several activists, which it's not new. Activist investing as an asset class has grown. The number of activist investors has increased. What hasn't increased is the number of targets, right? The number of public companies in the US has been declining steadily for 30 years. So it's expected. And it's kind of a double-edged sword. It does make it more complicated. But on the other hand, you also get sort of more optionality. And given that there are more activists than ever, whether they're full-time, part-time, or occasional, that's led to a degree of differentiation. And that can be industry focus or geography or jurisdiction, market cap focus, et cetera, but also engagement style. And there's certainly some activists out there that sort of brand themselves as a little bit friendlier, right? And a little bit more constructive. So when you're in these situations and you kind of try to figure out who you want to deal with, if anyone, you have choices, right? So increased complexity, but also increased optionality.
Well, let's bridge here shareholder activism with one of the biggest themes in the news so far this year and even end of last year, the pushback against DEI and ESG. Given the stance of the U.S. presidential administration, how do you think this will play out in proxy season this year?
Listen, I think the jury's kind of out for this season, but I suspect that most boards won't suddenly stop caring about diversity, and perhaps gender diversity in particular. With all these things, you got to focus on, the long, medium, and short duration waves, right? And sort of situate that in totality. I think this is a pretty short and choppy wave right now, the sort of anti-ESG DEI movement. And I think there's some corporate leaders that are trying to surf it for short-term gain. But the longer trend we're in my view, is still towards increase diversity. Not as a goal in itself, but just because the country looks different than it did half a century ago. And boards and companies will find they need to find talent where it is. And if you look at the space where Doug and I operate, which is mostly Silicon Valley and more broadly the tech industry, like you don't necessarily need quotas or regulations or shoving diversity down people's throat. I mean, just look at who the power players are.
Yeah, I think Seb's spot on with it, right? You're not going to see an engine number one campaign against ExxonMobil in this year, right? And you're not going to see a prominent proxy fight that has a significant DEI angle for 2025. I think we can all accept that. I don't think that a desire for a boardroom that looks like the employee population or looks like America writ large, it's going to go away. And I think companies will figure out how to adjust to it, do it in different ways. I don't think they'll be as forward leaning on it for the next couple of years as perhaps they were over the past few years. But time will tell, right? Well, we'll see what happens.
It might be a little duplicative to what we're talking about, but any further advice from either of you on directors and leaders on navigating this?
So, I mean, Wilson Sonsini has a very tech-centric client base, and our clients put a lot of emphasis on company value, culture, and they think hard about what's in the DNA of their company. And I don't think that's a bad framework. So whether you're in the C-suite or as a director, regardless of industry sector, I would say that staying true to your values and the culture of the company, like those are things you can't change every 4 years, depending on who's in power in Washington.
I think said another way, do what's right for your company, right? That's your job as a director always. And just understanding what that is and continuing to do it, and you'll be in good stead.
Great advice. Well, let's get some more advice from both of you. And speaking more generally, would love for you to share some best practices for companies to protect themselves against shareholder activism, especially just in light of it potentially increasing this year, next year.
I'll start on that one if Seb, if that's okay, and then turn to you. The primary advice I give boards, I think Seb is kind of in the same camp on this too, is you got to be measured in your response, right? You don't take it personally. Take a deep breath. Don't feel like you have a monopoly on good ideas. It's okay to sit and listen to an activist. You may not agree with what they say, and you may have already considered some of those things and found that they weren't workable. But to take it personally and feel like, gosh, who is this activist to attack me? We're doing everything we possibly can. Don't they see it? I mean, people have different perspectives on things, and it's best not to get overly emotional on it. And it's always good to take a breath, to sleep on things overnight before you launch something back over the transom. I think really, being measured is very important for a board. The weird thing about activism is it's sort of asymmetric warfare, right? The activists can do things that you as a board and as a company, even in the current environment, just can't do. So what do you think?
I think that's really well said, Doug. What I always tell clients in situations is, listen, if doing something feels really great, it's probably the wrong thing to do. You have to be measured. Unless your share price goes up day after day, year after year, which historically it is pretty rare and typically hasn't ended well, you need to engage with your shareholders, whether they are activists or not. So whenever I see a known activist pop up in the cap table of one of our clients, I advise them to pick up the phone and give them a call. They may not tell you what you want to hear, but there might be something you can agree on. And in either way, having that line of communication, I think, is so important.
Great advice. Any other best and final thoughts for our listeners?
Best and final thoughts. I guess it would be. I guess it would be. Think. It's always challenging for a board to manage for both the short and long term, and markets are short term driven, but you as a director have to sort of make and place long term bets at points, right? And so what's really critical there is the way you explain to shareholders the long-term bets you're making, right? Shareholders are not adverse to managing for the long term and to making things happen over the long term. But what they don't like is for the company to sort of tell them, look, we're going to do all these things. We're not going to tell you what's going to happen or pay off or when it's going to pay off. But trust us, we know what we're doing, and just sit back and be quiet. I think that, companies that do that tend to get into trouble with their shareholders. So as you're putting down those long-term markers, right? Communicate why you're doing it and say, this is where we hope to go. This is what we think is the best way to do it. This is why we're doing that. And we'll come back to you and show you our progress along the way. I think that's the way to manage and communicate the long term rather than just hoping that people figure it out and trust you to do what's right.
Well, we have a couple of questions that we like to ask all of our guests, and I'll start with the first one here. What do you think will be the biggest difference between boardrooms today and 10 years from now?
So I think we talked about sort of the long, short-term, medium waves earlier, and I think we're catching a big one right now. I think AI, and in particular, the probably pretty imminent dawn of artificial general intelligence, will materially not only impact not only how management makes decisions, but also challenge, I think, the relevance of a board of directors. If you think about it, a board is basically a way of aggregating intelligence, knowledge, experience. And I don't know about 10 years, but at some point, I think an AI model might be able to do a better job than a group of 8 to 12 individuals, even when carefully selected.
Yeah, it's an interesting one. So like tend to AI is certainly going to reshape the boardroom, right? I know there are boards out there thinking, how can we use AI to help in decision making? And so that's going to have a huge impact. I still don't know that there's ever going to be any substitute for getting people together and bouncing ideas off of each other and drawing on their own experiences. So I do think boardrooms will look different, maybe be optimized in a different way. But I do hope that there's still a bunch of smart people sitting around who are motivated to make the company better, which I think is true of boards right now. I think that'll continue, whether it's 5, 10, 50 years from now.
What is the last thing you read, watched, or listened to that made you think about governance in a new light?
Can I interpret governance very broadly?
Absolutely.
So I am reading belatedly Russell Shorto's great book, Island at the Center of the World, which is about the Dutch colony in Manhattan, and in particular about how it was governed. And that's an amazing window into how the Dutch heritage is enormously important to the history, not just of New York, but America, and how it's been influential on American commercial and financial governance in particular. So maybe that's a little esoteric for this podcast, but that's what comes to mind.
No, love it. Doug?
Yeah, I was happen to be at a boardroom recently, and just the way that particular boardroom kind of structured its discussions and prompted commentary from everyone, and kind of the way the lead director sort of pushed things along and made sure everybody was heard. I don't know that it prompted me to think about governance a different way, but it's always gratifying to see best practices in operation, right? And somebody who is really, really skilled at building consensus and driving to an outcome. I think, to be reminded of people at the top of their game who can do that is always impressive to watch.
Last question for you both. What is your current passion project? And you are not allowed to say work.
Does anyone say, did you have to say that because people say work is my passion?
Yes,
Oh,
it has happened.
Oh, goodness.
I mean, listen, you asked that question in the month of March, and the passion project in the month of March is usually the current proxy season, right? But yeah, I have some interesting things lined up for the summer. But right now it's really heads down.
Yeah, it's been heads down for me too. I think when we talked last year, I think I was trying to do more reading for pleasure, which was still one that I'm working on. Right, you tend to read a lot in this job, as everybody knows, but you don't always have time to read great, good books that aren't work related. So I'm really trying to increase that at the moment.
That's a good one. Well, thank you both for joining, and Doug, we'll catch up on your reading list when you join us on the show next year.
Sounds good.
Thanks so much.
Megan, thank you so much for that conversation. Really interesting to hear that they're not really expecting 2025 to be a standout year, but they're sort of seeing, 2026, 2027 to be the years where we see a huge difference being made by this new administration in the U.S.
Yeah, we'll see. I mean, other things that sort of came to mind too was the comment about, that I had not really reflected on, this idea that the number of U.S. public companies continues to get smaller and smaller, and we expect that to be the trend this year. But the number of activists continues to grow. And so that dynamic is really, really interesting.
Yeah, it kind of is reflective too of one of the stats that we mentioned a couple weeks ago on the podcast, that we saw a big departure of public company CEOs last year. It was the highest year on record, and a lot of them weren't retiring. A lot of them were taking roles in private companies, and so it kind of continues to be something to keep an eye on. Is being the public company as desirable as it once was? I mean, I think the IPO used to be this brass ring that private companies reached out for to get a huge cash influx and growth. And, is it worth the trouble is a big question. I still think there's, great power in being on the public markets, and particularly in terms of your ability to grow. I just don't know how you see that same level of growth if you're not a public company. But, we're seeing a lot of reasons that being a public company is kind of lousy. And so, it is interesting to kind of keep an eye on and see what happens from here.
Well, it's a great question for board members around the world. Although if Seb has his way, I mean, maybe this is a question for the robots to figure out.
That was really funny. I think he's the first person to say in 10 years there won't be board members. And coming from an attorney, that's a little surprising.
I mean, I love the provocativeness of it all. I mean, I am very much in his camp as well. I think now is the time to start thinking about how this technology is just going to upend decision making. And just because we've had board members in this context for the last, 50, 100 years, does that mean that's the right thing moving forward?
Well, I can say, Megan, as a Gen Xer, that my entire life has been filled with promises of this will do your job for you and then you'll get more free time. It has never been true. I have gotten busier every single year. Every new piece of technology has just made my life harder, not easier. So I would love to see if AI could replace board work. I don't buy it. I don't buy it for a second. I think what it's going to do is make board work different. I think that is very true. It might actually make certain parts of board work a lot easier and a lot better. And I think, anything that AI can do to add to the effectiveness of the board role, great. But I don't buy that it's going to replace board members. I'm sorry. Call me a Luddite. I just don't see it.
Well, it'll be interesting to see. I mean, maybe in a couple of years, it'll be the board member robots talking to the investor robots. And the notion of shareholder engagement is totally flipped on its head.
Yeah, I keep thinking, like, what comes first, the AI board member or flying cars? You know what I'm saying? Like, we still don't have our flying cars.
Well, flying cars aside, I will say if you are interested in diving into shareholder activism, shareholder engagement trends, we have a great report on the Diligent website on shareholder engagement and running tabletop exercises. I think that was another thing that came away from this interview. You need to be thinking about what response looks like at any given time and how you put forward meaningful engagement with folks that are interested in your organization. It's as simple as that. So definitely encourage folks to check out that resource.
Yeah, that's really great advice. And Megan, where can they find that? I think it's at diligent.com/resources.
Something like that sounds correct, Dottie.
Okay, we'll make sure to put a link to it on the podcast page as well. But really great report, and cannot recommend tabletop exercises strongly enough. I mean, truly, doing tabletop exercises for any type of a crisis or any type of, upcoming engagement that is going to be happening, that you want to get ready for and be prepared for, always, always a great idea. So thank you for sharing that, Megan. Well, that wraps up another episode of the Corporate Director Podcast, the voice of modern governance. We'd like to say a few special thank yous. First and foremost to our proxy season dynamic duo, Doug Schnell and Sebastian Alsheimer with Wilson Sonsini, podcast producers Kira Ciccarelli, Laura Klein, and Steve Clayton. Our sponsors, PwC, KPMG, Wilson Sonsini, and Meridian Compensation Partners. And most especially, thank you to Diligent for continuing to sponsor this show. If you like our show, please be sure to give us a rating on your podcast player of choice. You can also listen to our episodes and see more from the Diligent Institute by going to diligent.com/resources. Thank you so much for listening.
You've been listening to the Corporate Director Podcast. To ensure that you never miss an episode, subscribe to the show in your favorite podcast player. If you'd like to learn more about corporate governance and tools to help directors do their job better, visit www.diligent.com. Thank you so much for listening. Until next time.